Everybody, this tutorial is going to be a short lesson using a tool called stochastics. Stochastics, I'll spell it there on the screen for you. I'm not even sure where it comes from or if it's named after a person or anything like that. All I know is it is used as a trailing indicator, which means it's not predictive in nature. It's showing you something that just happened on the stock or happened in the stock's past. But it's information that can be utilized to tell you if you are potentially in a good buy position or a good sell position on the stock. And emphasis on the word potentially. Okay, because it's, again, a trailing indicator. It's not predictive in nature, but it can give you an idea and help you rule out whether that stock should be purchased or not. Okay, it can at least take that vast pool of stocks that you're looking at and considering for purchase and help you whittle them down to just a few. So first thing we need to do is we actually need to get our stochastics indicator on our screen. We're using, of course, Telechart 2000. So how we get it on our screen is the following. Up here in the top left-hand corner of the chart, you see that little green plus sign. We'll click that. Come on, there we go. And we just begin to type out the word stochastics, and you'll see we get lots of results. And the one that we're looking for says just simply stochastics. That's the only one that we want. That's going to pull up another graph on our chart below our volume. And what we're going to do is we're going to click this little icon right here, this little up and down arrow. Okay, and then I'm going to overlay it over my volume. Now I'm going to go edit it. I'm going to edit it for a couple of reasons. The first thing is I need to be able to see it better. And the second thing is I want to make sure my numbers are correct. Now, if you're not using Telechart 2000, but you can pull up stochastics on whatever platform you're using, the numbers that we're using needs to be 12 in the period, 3 in the percentage, and the average type does indeed need to be simple. Okay, we're also going to pull our data source from price history. That's the default conditions for my stochastics, but if it's not the default conditions for yours, then you're going to want to change it. That way, you and I see the same thing whenever we're having our discussion. Now, I'm going to edit this just a bit because I really want to be able to see it, so I'm going to change the color. And keep the line style the same, but I think I'm going to make it wider so it really jumps out at me. And I'm going to say OK. Now, it gives me two little drop downs, of course. One is it says stochastics 12% K3. The other one says percent D5. We're going to edit that. We're going to change that 5 to 3. There we go. And keep it simple. And I'm going to leave the line width and everything else the same. And, of course, our data source is by default stochastics 12% K3. That's exactly what we want. We're going to say OK. Now, the first thing that you need to know about stochastics is that thick line that I've edited, the thick magenta line that I've edited, is an indicator of the people buying the stock. And the little thin light blue line, that baby blue line, may be white on your screen, that thin line is the sellers. And so when the thick line is above the thin line, well, that indicates that there's more buyers than sellers. And then when that reverses direction, like right here, that indicates that there's more sellers than there are buyers. Now, if you look to the right of the volume chart, first of all, we should be able to see our volume. But now I've got a whole other set of numbers, and you can see right here it says 5385. If you don't see these numbers and you're using the Telechart 2000, if you come right down here to the bottom right-hand side, you can click that little arrow, and it can make them all disappear or show up, and I want to see them all. So this, of course, indicates the volume. That tells me that 11.2 million trades happened on this particular day. We're looking at the daily chart. And the stochastics tell me that we're at 5385. All right, so here's what you need to know. When this number, 5385, is below 30, it indicates that the stock is in an oversold position. That means it's potentially in a good buy position. So when this number is under 30 or under, it's potentially in a good buy position. When it's over 80, it's potentially in a good sell position. Okay? Again, emphasis on the word potential, and we're going to show you how this works. So this one's at 53.85, and you can see this is where we are right here, 53.85, and the number that it's associated with is the thick line, or the buyers. Okay, if we go back in history and we see when the stochastics were all the way down here at the bottom of the chart, and we just click with our mouse back here and then look all the way to the right, we can see that was at 4.78. Okay, well, that's well below 30. That was potentially a good buy position for the stock. And if you look back during that time frame, you can see that indeed we fell, okay, from a high. We went below 30. We rode here for a couple of days, and then we reversed direction and we went up on our stochastics, and that sort of matches pretty much what the actual stock did. It found a bottom, and then it began to be in what was called an oversold position, and people began to buy it, and it began to move up throughout that period of time. Once it moved up beyond the 80 mark, and if I put my mouse on it and click and hold, you can look over to the right. You can see here's where we crossed that 80 mark, and we went up. Okay, and we rode that area for quite some time before we reversed positions and went back down. However, we never made it back down to the 30 mark. In fact, this was, well, actually we did. We made it back down below 30, 25, somewhere in that area, 26, and we reversed direction again. So they show you potentially good buy and good sell positions. So if I'm looking for a call, if market tone's positive, the S&P's up, everything's happy and hunky-dory and everything like that, I'm probably looking for a call play on some stock out there in the stock universe. Okay, and as I'm going through my short list of stocks that I'm looking for, I'm looking then, of course, if I'm looking for a call, I'm looking for stocks that are at 30 or below. In general, this is just rule of thumb stuff, okay, because there are some exceptions. So I'll just go through my list, and let me just go ahead and just click a stock. And I see that one's at 38. It's not in a good buy position. This one's at 29.4. This would indicate that it is in a good buy position, potentially. This one's at 37. It's not. This one's at 47. It's not. This one's at 69. It's not. This one's at 98. That's a potential buy position for a put. Certainly not a buy position for a call. So that can help rule out and narrow down the amount of stocks that you're looking at from maybe a pool of 15 or 20 to a pool of like 2 or 3. Now, you still have to use everything that we've discussed so far. Okay, good trend lines, bouncing off of moving day averages. You still have to use those things, and that indeed that is the thing that you want to determine whether you want to play this stock. The stochastics just help you narrow it down. Now, if I had bought into a call position, say right here on this particular stock because it was below 30, it rode up. Actually rode to 42, reverse direction, but I'm going to hold because it's not going below my sell position. Or maybe I just decide to risk it to hold because I see it's approaching a moving average that it's going to bounce off of. And then it does bounce off of it and it reverses direction. And now it's all the way back here to 99. Okay, well, actually it's 98.6. Well, now I'm thinking about selling out of that position and taking my profits. So this stochastics are used to give you good potential buy and potential sell positions on the stocks that you're looking at. Now, before I move any further, I know somebody's going to have a question that says, Jimmy, you're looking at the daily chart. Is there any way that this can be applied to say the minute or the 5-minute chart? Absolutely. So let's roll over to the minute chart. And you will see then our stochastics go high. Okay, and you can see as the stock's rising, it rose up to a certain point, and it's continuing to rise, and our stochastic is staying up here on the ceiling, and then it reversed direction at some point and came back down. Our day traders, the people that buy and sell stocks and just need pennies worth of movement up and down throughout the day, they use stochastics to help them determine on when to buy and sell stocks, and that can potentially tell you, okay, maybe this is a stock that I'm going to go into for today. Okay, let's determine that I've ruled that into, hey, I'm going to go ahead and buy that stock. And since I'm so high, I'm actually looking for a put play on this particular stock. So let me roll back to the daily chart for just a minute. This is a stock that says in the stochastics that it's in over bought territory. So now I'm looking for a direction change to come down. Okay, if I draw trend lines on that, I can see that it's in a roughly the same plane as this right here. It's probably going to reverse directions, okay, or probably close to that, just looking at trend lines only. If I were to draw a trend line across the top, I'm not. You should be able to draw trend lines on your own. In fact, you should plainly be able to just see this with the naked eye, that I'm probably at a directional change area. Okay, so now I'm going to look for a put. So I'm going to roll over to my minute chart. And what I'm looking for is I'm trying to find the stochastics when they're all the way towards the top of this chart. That's my buy point because it's going to move down from that point. So up here is my potential buy point for a put. Again, potential. All of this, of course, is rule of thumb only. Let me show you one exception to the rule to show you that there can be exceptions. I'm going to go back to the daily chart. I'm going to pull up the stock HP. This is not the computer company. This is the energy company. And if you look on the stochastics, remember, below 30 indicates a good buy point. Above 80 is, well, below 30 indicates oversold, potential buy point for an up play. And above 80 shows overbought, potential buy play for a put or a potential time to get out of a call play, right? And you can see, though, that this particular stock never goes below 30. It just never does. It just never, ever, ever, ever does. This is a solid up moving stock. It just never goes below 30. So this is an exception to the rule. In this case, when I see it around 40, I'm probably going to look at that as being a potential buy point for an up play. So there are exceptions to the rule, but hopefully this will help narrow down your long list to a much shorter list.